So I'm Erik Flees. I am the Director of Customer Support and Operations for Hyosung Pay, and I'm here to talk to you for the next 3.5 hours about customer support. All right, so let's see, can you all hear me out there? And if you can't, I'll turn up my voice too. All right, so we're all in the ATM business, and we know that cash is still extremely important and extremely viable out there. And as a way of showing that, those of you who have used cash to purchase something in the last 30 days, raise your hand. Okay, those of you who have cash in your pocket right now, raise your hand. Now the tough one. Those of you who have a coin in your pocket, raise your hand. Purse, pocket.
50-cent piece.
50-cent piece, all right. So as you can tell, cash is still very, very important to our industry. It's very, very important to customers out there. There's all sorts of folks out there doing all sorts of things with cash. And so it's not going away. It's extremely important in grocery stores, convenience stores, gas stations, so it's there. But what has changed is how consumers and retailers expect to interact with ATMs. ATMs are no longer expected to be just a cash dispense mechanism. It's designed to do a much broader set of interactions. And so retailers, they want fewer manual processes at the counter. They don't want their folks being interrupted to do things like change cash, pay a bill, do things like that. And that's what we're here trying to encourage. And ATMs, they need to evolve to be a full financial kiosk. And Hyosung Pay, we're working on that. So we're trying to get it to be a cash in, a cash out, and a cash to digital, digital to cash mechanism. So if you look at what types of transactions can occur, these are designed to not just be theoretical services, but actual real services that solve problems. Bill break reduces interruptions. Bill pay and mobile top-off increase recurring users. That makes a habitual user come into the store, come into the hotel. They come back time after time to reuse that. Digital wallets allow people to bridge the gap between the digital environment and the cash environment. And so each item that we add to it increases the capability of the ATM and the return visit from customers. It allows them to become very familiar with the place and what they're doing. It increases foot traffic. Then somebody's in the store getting changed, they're going to need a soda, they're going to need a water, they're going to need to buy some donuts. They're going to want something, and that's going to increase the profitability for the store vendor as well. So each of these, they just keep increasing services and getting additional things for everybody involved. But with customer experience and support, reality sets in. The issue used to be, is the machine up and operational? Now it's what's being done on the machine. It's a mixed use thing that goes on. It's not just, is the machine operational or did the machine fail, but it's, did the cash fail? If you look at your bills, those of you who have bills in your pocket, take a look at your bills. Talk about bent, folded, spindled, mutilated, half destroyed. A lot of bills get tattered and torn relatively quickly. That's why a lot of Europe has gone to coin. And so we're trying to maintain the cash flow. We're getting rid of the penny here because it's not worth the minting anymore. So when you go to a cash environment like this, you need to have clear, concise instructions that are available to people, because not everybody is on that same level of how to use technology. If I had my dad go up to an ATM and try to pay a bill, he'd not have a clue. But he can walk into a bank and talk to a teller and get cash and pay a bill and do things like that. So you need to make sure that your instructions are clear and concise. You need to make sure that each step of the transaction tells the customer what's gone on with their cash, because they're trusting you to take their cash. All those cash-in services, you need to be able to put trust in the customer to use that service. They need to know what's going on with it, where it is, and did it finally make it to the end person? Did the money get put into my wallet? Did it get paid to my power bill, my water bill? Is it, going to make it to where it needs to go? That support is extremely important, because if they can't figure out how to use the product, they're either not going to use it or they're going to call support, and then you've got to walk them through the process. So on-screen instructions are extremely important. And success isn't just, did it accept the money or did it put out the money? It's how did the customer feel about it? Because you can walk up to the machine, use it one time and say, yeah, I paid my bill, it was a success, but I didn't like it. I didn't like the process. I want it streamlined. That is a failed success. You've completed the transaction, it was successful, but you didn't win the customer. So you need to make sure to win the customer with that. So when you're designing, you can't design just for the pilot. You need to design to scale. So focus on where the gaps are. Take a look at the gaps, because when you go from, if you got 4 machines, not too difficult to take care of 4 machines. You got 4,000 machines, all of a sudden it's a very busy time trying to maintain those 4,000 machines. So retailers, they expect auditability. Can they audit the machine? Can they track it? Do they know what's going on with it? Reliability. Is it continually working? Is it continually functioning? Is it down every day? And what's going on with that machine? So we need to make sure it can handle the cash that's in a person's pocket, that everything is reliable, and that everything comes through and shows it got completed. Support models need to scale for transaction and delivery. If you've got 2 people in your back office doing support for a pilot, not too bad. If you've got 2 people trying to do support for 4,000 machines, complicates life a lot. So you need to plan not just for the pilot, but look at it, what's going to be your rollout plan? What's going to be your support plan? Where's your self-service innovation going to be? How are you going to handle all that growth? Is there user training for the end customer? Is there a simple way for them to use your machine? The retailer, what do they do if they get a complaint from a customer? The operators, all of you out there, what do you do if you get a call saying, hey, the machine ate my 20, I want my 20? And all that is extremely important for us. One of the interesting calls I got during our rollout and our pilot of this is we had a user doing a bill break. She put a $20 into the machine, and it was a bent, fold, spindled, and mutilated 20. So it jammed up in the machine. She got her transaction failure receipt. She saw the number on the bottom. She called it. I pick up the phone. She goes, your machine ate my money. I want my money back. I'm going to stand here in front of this machine until somebody brings me my money. And she did. She waited there, and we got a hold of the vendor the operator who was in charge of that machine, and he goes, okay, I'll head on over there. Luckily, they only had 4 machines, again, small amount, easy to support. But that shows you the range of people that you need to deal with, you need to plan with. And so when you deal with ATM and automation and you take the human out of it and put in a machine, you've got to figure out how you're going to deal with that. And that's a key thing that you need to work when you're developing your services and your products and your rollout. How do you deal with the pilot part, and how do you deal when you're rolling things out and just keep flying out the door, more ATMs, you go into more places, how do you deal with all that? So to enlighten you on some of the things we ran into during the pilot, we've got Dax here, and so Dax is the Executive Vice President over at eGlobal, and he and I worked a lot on the pilot program that we had for this. And so Dax has a wide variety of statistics and numbers he's going to show us, and we'll take some questions. Does anybody have any questions for me at this point? All right, I'll turn it over to Dax.
All right. Thanks, Eric.
Yep.
Yeah, Dax Matthews, Executive Vice President of eGlobal. If you're not familiar with eGlobal, you may have worked with one of our sister companies. eGlobal is one of 4 businesses, part of the Grant Victor family of companies. Next ATM, formerly ATMequipment.com on the retail side of the business. eGlobal is the ISO IAD. And then 2 businesses on the FI side of the industry, TetraLink and NextBranch. We have some experience just over the last few years in piloting multi-function ATMs, and I wanted to share some of that with you today. First off, talking about really the challenges that our industry is facing. You guys should all be very familiar with these. Number 1, market saturation and commoditization. The sales pitch around an ATM has really become diluted to a single price point. You're really going in, and it's tough to get a conversation in the first place, depending on who you're selling into. When you do, it's really about how much can you pay me, and that's been tough. It's a tough market to navigate as a retail ATM operator, especially with ATM transactions declining. For those of you that attended David Dove's presentation a couple hours ago, he painted this picture very nicely. He's called it a headwind, 5 to 6% headwind year over year that we're seeing in a reduction in withdrawal transactions. Some of that being driven by spike in surcharge rates as interest rates have gone up over the last few years. Really, what levers do we as ATM operators have to reach for? You got one, it's your surcharge rate. And so we've seen an increase in surcharge rates to make up for those increased costs. And subsequently, the revenue is declining there. On top of surcharge rates going up, we also see foreign ATM fees becoming more prohibitive. Banks charging their customers for out-of-network withdrawals. Those have increased and in some cases are higher than the surcharge rate at the ATM, which is making it difficult for our businesses. We're seeing a decline in cash as a form of payment, and we'll talk about that in a little bit as well. And then David Dove again in his presentation talked about interchange and how we've seen that sharp decline over the last 10 years, even to the tune of saying that there might be a day where interchange is non-existent. And so as ATM operators, we need to be prepared for that. The networks are getting very creative in imposing new fees. We're, just in the last couple of years, the MasterCard fee that we're all so familiar with, as well as the NICE fee just this last year. So we should expect that those fees will continue to come. In addition to declining revenues and transactions, we're seeing costs on the rise. This last year, tariffs were really impactful. Interest rates, they're finally coming down, but it doesn't look like they're going to be dropping significantly anytime soon. And hardware and software upgrade cycles, TR31 the past couple of years, and any 3-letter acronym that might come in the coming years always represents additional cost that doesn't drive new revenue. So that's a big challenge for us as revenues continue to drop. And then lastly, revenue share expectations, and this is part of market saturation and commoditization, is that you're really, to land a really competitive, awesome deal, you're not going to get away with 50% of revenue anymore. The expectations are much higher than that. So how do you succeed in this challenging market? I don't know the answer to that, but I have some thoughts about what we call ATM Plus here at eGlobal. With each challenge comes a potential opportunity, depending on how you look at it and how you adapt your business. This conference alone, my water bottle has Super ATM written on it, and we've heard a lot of different names for this: next gen ATM, Super ATM. There's been talk about this retail FI convergence that's occurring in our industry, but it represents an opportunity for us to say, how do we do more than just dispense cash in that 2x2 footprint we have in our customers' stores? Part of that might be total cash management, which allows us to be experts in what we claim to be experts in, which is cash and cash management. That might include, addressing some of the inefficiencies around why is it that we show up to load the ATM and then an hour later, an armored courier is there dropping off cash and picking up a deposit. There's inefficiencies that exist today in retail around cash management, and it gives us as retail operators to rise up and address those needs and begin to manage them in our service. Also, an opportunity for new financial services. As we talk about where is cash the strongest today, there's still a need for alternative financial services, and more a drive to do those at a self-service kiosk. And I think the largest opportunity in all of this is for a value reassessment to occur. And that's both value that we bring in our service, as well as the value of these contracts, and potentially an opportunity to pull back some margin in your own contracts and relationships. As well as, it's crazy that we have, David Dove pointed out that the biggest variable in our economics is interest rate, and we have no control over that. So, it's time that we include things in our contracts that are protective against things that are outside of our control. So talking briefly just about cash usage trends, this is some data from the Diary of Consumer Payment Choice for 2025. And we look at this pretty closely, and I know you guys have probably all seen this before. This is 2025's report that's looking at the percentage of payments made by payment method. And this green section here is cash. I mean, we see back in 2016, 31% of the participants of this survey were 31% of all payments in a given month were made in cash. We've seen that since 2016, so a 10-year period here, we've seen that significantly drop. COVID did a number on cash for various reasons. There was the initial scare that cash was spreading the virus, and so people stopped using cash altogether. We started to see some retailers going cashless, which is a term that didn't exist probably before 2017, 2018. And that's created some of the drop here. In 2024, we're looking at only 14% of payments made in cash. Some silver lining here is that if you look at the average number of total payments per month, you see that payments have actually increased and continue to rise year over year, and cash is sort of flatlined here post-COVID at about 7 payments per month on average made in cash. But these are, that's still half of what we saw in 2016. Despite all of that, there's still more cash in circulation today than ever before. And it still plays a vital role as being the third most used payment instrument. We also look at it based on household income. So percentage of total payments made based on household income, looking at the lower income demographic here, less than $25,000 per year. Cash is strongest at 24%. Also, as looking at it broken out by age group, we see that cash is prevalent most among the 55 and older demographic. I think the summary, and as we talked to Erik at the beginning about who's got cash on hand today, who's got cash at home today, if you look at those statistics, we see that there's more cash being used as a store of value, where people, especially in times of economic uncertainty, will bring cash home and store it. We've seen that climb significantly since COVID, as well as just cash, the amount of cash that people are carrying in their wallets today. So really kind of focusing on this lower income demographic, and in the past, terms being thrown out like underbanked, unbanked. As of 2023, 14.2% of American households were considered underbanked. That's 19 million households. 4.6% of those 4.6 in addition to that are unbanked, and 66% of those are cash only. An interesting statistic, we participated in an RFP with a large national supermarket chain that you would all know, and we learned that 25% of their customers used alternative financial services in the last year. Alternative financial services being bill payment, check and debit card cashing, money orders, money transfers, typically cash-centric financial services that are targeting the underbanked demographic. This customer base accounts for 49% of the grocery store's total revenue. And so you see that they play a vital role in in that customer's sales and revenue. One thing we pulled from the RFP was that there is a strong desire to offload the financial services desk to a self-service device. And so I think we're seeing as an industry collectively the demand for these self-service devices that are doing more than just traditional cash dispense. The challenge being that, our industry hasn't quite built the infrastructure around that. Another, just to point out, financial access is expanding. As I compare the share of payments made in cash versus credit versus debit from 2025's report to 2024's report, something that stood out to me is that we saw a sharp drop from in the dark purple there being 2024, light purple being 2025, went from 32% to 24% of total payments made in cash. That's an 8% decline. And then you see that decline actually made up there. Credit card transactions increased 6%, while debit increased 2%. We know where that 8% went. It went right into credit and debit transactions. And why? I think the takeaway for me is that financial access is expanding. We're seeing financial services coming downstream. Fintech is delivering core banking functions. It's, a booming market right now because there's so many different fintech companies that are seeing a need and trying to address that need in the market. The digitally banked is really the right term for this group of people who, as ATM operators, we should be looking at and targeting with cash. Digitally banked being people who may not use a traditional bank account, but manage money through mobile financial apps and prepaid or fintech programs. Apps now offer direct deposit, bill pay, debit cards, budgeting tools, and replicate everyday banking services outside traditional banks. Buy now, pay later app-based credit and embedded lending are giving underbanked consumers purchasing power previously limited to traditional credit products. So no longer do we live in a society where you need a bank account to participate in the digital banking sphere. You see apps that here recognize these logos, I'm sure, but many of these you don't need a traditional bank account to open and participate in. Not to mention that smartphone usage by household income, if we're looking at this group that's less than 30K household income per year, 82% have smartphones today and so have access to these programs. And I think, again, as ATM operators, this is stuff that we need to know, we need to talk about and figure out how do we adapt as an industry. In this journey of ATM Plus, we developed a relationship with a company called Incom. Many of you might be familiar with Incom. If you go to a grocery store today and purchase a prepaid card, there's a very, very good chance that card is powered by Incom. Might be a vanilla Visa or MasterCard, but Incom is the card issuer. They own that program. For over 10 years now, they have realized that there's this demographic of people that is cash heavy, but needs access to the digital sphere. And they have been targeting those customers with a program they call Cash at Retail. Cash at Retail is a kind of a tri-party agreement. They partner with retail establishments, so 7-Eleven, Walgreens, CVS. You can walk into today, and if you are a customer with cash, you can go over the counter and do a transaction. So say if you want to put $200 into your Cash App account, you can do that over the counter with cash. So it's been their approach to bridge the physical and digital payment ecosystems. And this shows you just growth in the past 9-10 years. This program initially started focused on utilities and bill payments. So cash payments for your utility or energy bill, and as well as GPR, which is general purpose reloadable. That's Green Dot, PayPal, those type of programs. And as it's grown, you look at 2022 here, it's now a $24 billion program. That's $24 billion that's being collected in cash over the counter to transmit to some digital sphere, right? Or provider. And that program has extended well beyond GPR and utilities, and is now this gray represents fintech or neotech. This is 2027 projection. It should be about $40 billion in this program. 2025, we saw there's over 200 million transactions, 90,000 retail locations, and $30 billion in cash to digital funding. as we talk about Hyosung, the Pivot Kujera Hyosung Pay platform, this is a pivotal partnership. As you're approaching this, thinking, how do I transform my business away from just traditional cash dispense and start bringing in cash for various transactions? You want to make sure you're doing it with the right partnerships, and those partnerships are in many cases responsible for compliance and the regulatory burden that exists as you start to bring cash into your machine. Income, I think, is a pivotal part of this partnership with Hyosung, and excited to share more with you guys about that in a bit. But I also wanted to share just some practical advice about how do you, as you're thinking about when the time is right to start bringing this to market and selling it. I wanted to present a couple different models that we have been exploring. One we'll call the AFS revenue model, AFS standing for Alternative Financial Services. The Hyosung Pay Marketplace is a good representation of what those services might look like. But the goal is to drive incremental revenue through these financial services, primarily serving the underbanked and digitally banked consumers. The benefit is it increases the value to the store through added foot traffic and potentially transaction revenue. And your ROI is really driven by the transaction volume and the revenue that you can generate through those services. Some of these services, clearly represent financial services, money transfer, bill payment, check cashing, some of these digital wallet top-ups. And the reality is there is revenue to be made here. But I think the other model that I want to talk about is one that we've had more success with, and that is a targeted services model. So this model is you find a specific customer need and come to the table with a purpose-built solution that addresses that need. And when I say need, a lot of times what that really means is a cost center for your customer. This might include consolidating cash services at the ATM, like deposits, store deposit, merchant deposit, and bill exchange. This increases value by reducing store labor, shrinkage, and other cash management costs or processes that create burden. And the revenue model shifts away from revenue share and this haggling over a surcharge rate percentage to an ATMs as a service with a managed services fee or a subscription fee, whatever you want to call it. On the side here, this is just an example of application. This is a public study done by the IHL group. This was in 2018, I believe, where they analyzed cash in retail sectors and wanted to figure out what is the average cost per transaction of a cash transaction. We all know that credit and debit, and this is something that has been on our side for many years, that a credit and debit card transaction comes with a fixed fee. Cash is less clear, and some of the costs around cash are baked into labor hours, whether those are entry-level employees that are closing their till, taking a break, passing off their till, to management who's now creating a deposit, reconciling transactions against the cash that's been collected, auditing discrepancies. Also includes cash in transit. If they're paying for Armored to come out every single day and pick up a cash deposit and drop off change. On top of that, shrinkage being how much money slips out the door in cash in these processes, whether that's employee theft or miscounting. This is something that, while I don't like it, it's this is out there, and we're running into more and more of our customers that are looking at cash as more of a burden than a benefit in their payment environment. And this is actually what prompted eGlobal to get into the ATM Plus space. One of our customers called us one day and said, this is back in 2022, 2023, and said, hey, we've actually made the decision to go cashless. We want to keep your ATMs, but we are definitely getting rid of cash on the property. Is there any way you could support that? So we got creative. We put together a kiosk that provides additional transactions, including cash to card conversion, a prepaid card purchase, allowing the kiosk to be the only point or the only hub for cash on the property. So if a guest walks into the hotel expecting to pay with cash, they would point them to the kiosk, and they could exchange their cash for a prepaid card. In addition to that, we we brought bill breaking to the table, realizing that, there's a lot of tipping done in cash at hotels. And as a hotel transitions to cashless, there are no longer tills at the front desk to exchange for lower denominations. And we've seen consistently that hotels that go cashless see a reduction in cash tips because of it. And so bill breaking has helped bolster tipping for the properties where we've implemented that. And again, just for practical use and just sharing some of the secret sauce, if you will, this is an example of one of our sample calculators, where when we approach a new customer that's interested in our services, want to just demonstrate how we're looking at revenues and costs, and as well as capital, really calculating based off of surcharge transactions, surcharge rate, expected volume decline if they are considering going cashless, or reducing the number of tills. There are, we have proven that a cashless property does less transactions. As obvious as that sounds, we have the data to demonstrate that. We look at bill breaking, expected bill breaking volume. At some point, we implement a fee, willing to cover a certain number of bill breaks based on the size of the property and what we expect it to do. We'll build into a subscription fee, and then potentially offer a fee for the number of bill breaks we do beyond that number. A prepaid card purchase, also just estimating based on, we have the ability to implement a fee for those cards to the guest, or potentially our customers will pay that fee because they don't want to inconvenience the guest. And so estimating revenues, any revenues that might come there, as well as monthly costs. There's going to be, if you're implementing a Pivot Gajera, you can expect, first of all, higher CapEx costs out of the gate. You're going to expect some transactional fees and or licensing RMS fees. These are FI grade machines. The tools to manage them are a lot more sophisticated. So just to demonstrate some of the complexity around ATM Plus, but also give you something tangible. We look at a profitability summary where we're kind of looking at total revenues generated against total costs, and then calculating a subscription fee to offset that. A few different models and ways we've approached it with our customers is saying, hey, we will pay you 0% of the revenue share. We'll pay you the normal, under a national contract, the normal agreed upon standard revenue share, and or 100% of the revenue share if that's an easier conversation. And then just bake that into, how do we cover what we need to each month to make that work. So here's a few pictures of some of our piloted Pivot Gajeras. This is, again, the Hyosung Pivot Gajera. If you haven't seen it at their booth, go by and check it out. Erik gives great demonstrations. We piloted 25 of these units in a C-store environment, and also have this is a DraftKings sponsored terminal. DraftKings is an income provider that, it has a desire to reach this digitally banked consumer, wants to have access points for cash to enter their digital wallets. And so we've partnered with them to provide this ATM that's also accepting cash to digital wallet for DraftKings. I'd say, there've been a lot of challenges along the way, and I give Hyosung credit in creating a product that's way ahead of its time. You can do a lot of these things, and people have been doing them for years with just a traditional kiosk that has a single deposit cassette. Once you implement or introduce recycling, it creates a lot of complexity, but also, in my mind, it's clearly the future. When we start accepting deposits on a kiosk that has a single deposit cassette, it's typically our operators are there once a week, just because of, you'll fill that deposit cassette quickly. But recycling gives us the opportunity to you repurpose the cash that comes in. Meanwhile, there's a lot of work that needs to be done in the industry to catch up to that. Some processor certification so that we can get correct cassette balances. That's been a challenge, as well as CIT, working with traditional armored relationships. This model has been a bit disruptive to that. Data is, aggregating and getting the data that you need for these transactions is a challenge. Again, if you don't have a processor that's saying, hey, we'll take these deposit transactions and give them to you in an import file, again, to Hyosung's credit, they've done a great job at responding to that need and developing and addressing these needs in their portal so that we have access to the data that we need to drive revenue share and do the things that we need to do behind the scenes. There's also, banking and compliance complexity here. You can't just fire one of these up under your existing sponsor bank without the right approval. And then, again, challenges with today we're using third-party operators to, manage these services. And that's been a learning curve. It's just new equipment, but overall, I think we expect as we deploy financial grade equipment that there should be a stretch from what we're used to. I mean, these have a full Windows PC in them, and it's just like I said, more like an FI machine than a retail machine. Some of the wins and successes, I think we've proven that there's a demand for some of these transactions. We weren't sure what to expect with bill breaking in a C-store environment, and we were able to prove that there is demand there and value to our customer. There's been, again, the Hyosung Pay portal has come a long way from the beginning, but Hyosung has done a really good job in getting us what we need so that we have it all at our fingertips in their portal. I think we're on the right track with the right partnerships. Fiserv, Check Free Pay is the bill pay program. We're excited about what else is in the roadmap with Hyosung, and the Income Cash at Retail program. We're excited about that as well. And I think all in all, it's been a bit of a stretch for us, but it's helped us to become better, and we have a stronger infrastructure to support this new model. So despite some of those challenges, I think it's been a win for us, and we're excited. We'll be expanding from 25 to 100 of these devices over the next year. So yeah, I think all in all, really appreciate Hyosung and Erik and the team, that the support they've provided throughout the pilot, and again, optimistic about what the future holds. I think the takeaway that I would hope that you get out of it is that this is an opportunity for us as retail operators to rise up in unique ways. One being, let's stop giving away all the revenue. Let's use this as an opportunity to say, hey, we'll provide this kiosk, we'll provide you with bill breaking, but we'll need to keep the revenue from the service to subsidize the cost. They are much more expensive. There are more fees being introduced on a monthly basis that we'll need to cover. So I think we need to be strategic in how we approach it. Let's not throw a bunch of services at it and go in with a 75% revenue share. That's shooting us all in the foot. We're really good at this race to the bottom, and I think the last race has been won, and it was the merchant that won it. But I think this gives us, it's a race to the top. Let's see what collectively we can come up with together as an industry. It takes a much more consultative approach if you're looking for a targeted placement model, finding what are my customers' needs. You begin asking about pain points, and you'll be surprised what we learned. We had a customer that told us they were losing $1,000 a month in shrinkage alone. And so by implementing our solution and being able to reduce the number of cash tills where cash was coming in, they were able to eliminate that alone. Well, there's $1,000 that, has now been freed up, and there's some wiggle room for us there to come in with pricing on our service. So yeah, I think that's all I have. Appreciate you all coming out.